Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Well, by the way, before we get to our next management, just pull up the intraday chart of the Nifty. We're down close to around 50 points yet again. So at higher levels, you're seeing some bit of supply that's coming in there. And the Nifty Bank as well, that staged a good pullback. Well, that as well has moved into the red. But let's focus on another company. The Director General of Trade Remedies, as well as a recommendation, they have recommended a 2-year extension on the duties of solar glass imports from China. However, the domestic producers will no longer enjoy the protection of the said tariffs. This after the Revenue Department struck down on the recommendations coming in from the DGTR. To understand this, the impact on the business as well, we're joined by the Executive Chairman of Borosil Renewables, which is a key player in this particular vertical. Hi, Mr. Kheruka. Thanks so much for joining in, sir. I recall we spoke around 10 days or so ago, and you said there's no reason why this should not get extended. Unfortunately, this anti-dumping duty has been pulled out. So my question to you is this a done deal, or is there a possibility that this can be reconsidered as well? And just break it out for us. ADD is not there as of now, but BCD is there, and another tariff as well is there to protect the domestic industry as well. So explain that to us.
Sure. So ADD has been withdrawn, or it has not been renewed.
Yes.
It expired at the end of its 5-year term. And now the one thing that we can look at is government is going into a regime of imposition of basic customs duty on import of solar modules and on the import of cells. So there is a possibility they might go in for that. There is already an existing 10% basic customs duty on import of solar glass. But this has been coming under an exemption that was granted in 1999. So that's about 23 years ago. And which was that exemption is supposed to lapse in March next year. So, of course, nobody knows what the government is thinking, and I don't either. But there is a possibility that basic customs duty might be imposed. However,
if the basic customs duty is imposed, Mr. Kheruka, I just wanted to come in on that. What is the rate at which ADD was imposed, and will the basic customs duty be enough to deter imports? You're talking about 10% out there?
Right. So the effective rate of anti-dumping duty on imports from China, from the largest manufacturers, was at the rate of about 10%. So it wasn't a very hefty number. And if the basic customs duty is also 10% in case it comes in. So that's a matter of time. That time will tell us whether they are going to levy basic customs duty or not. I know for a fact that in the absence of this thing, see, we are a plant that has been running for the last 14 years, and so we are depreciated, and we have very low interest loads and so on. But new people who are coming in would be suffering from the weight of a lot of depreciation and a lot of interest payment. So, in fact, this, if anything, might serve to it might serve as a dampener for new companies which are looking at coming into the production of solar glass, and in a way that goes against competition, because
right. We take that point, Mr. Kheruka. We just wanted to understand that for now there is no anti-dumping duty, and the basic customs duty of 10% hasn't been imposed yet, right?
No.
Okay, so what does this discontinuation or non-renewal of ADD mean for the average utilization for the industry in FY23? You said your plants are all depreciated. You don't worry so much, but the newer players will get impacted. But overall, the average structure of the industry, the utilization, how does that get impacted?
The utilization of glass is at an all-time high. We have been importing a lot of glass into the country. So there's a very, very strong demand for solar glass. That's not going anywhere. That's the first thing. And the second thing is that now, in the absence of duty, the glass will come in freely, so it was coming in freely even in the past. So it doesn't really change very much. And in any case, glass from Vietnam was not coming in at all with any duty. So the glass from Vietnam was coming without duty. The Vietnamese glass is made by a Chinese company called Flat Glass. And there's a company in Malaysia, which is also Chinese owned. And until March of last year, which is 16 months ago, there was no duty on those imports either. So it's not like there is something. It's a very new thing or a very major thing.
Yeah.
Meanwhile, our research and development continues all the time. We are very aggressive in finding ways to improve productivity and reduce costs.
Yeah.
So all that is always going on.
Okay. All right. Mr. Kheruka, you believe that it's not going to have a big impact. For the time being, even the stock market believes that. I'll tell you why. Because, if the ADD is not continual, the stock market would have been very nervous. But it seems there's plenty of appetite for your stock. Because, in fact, the stock is up by close to 4.5% odd in spite of this news coming in. But that's about the stock price, and we don't want, any comment on that. Let's talk about business. Now, ADD is out of the way. So let's compare this. What is the current price of the glass that you are manufacturing? Point number one. And let's compare that with imported glass, landed cost of imported glass coming in from China. What is it now? And give us a rough difference.
You see, our prices are different for different customers because it depends on how close they are to us. So there's a lower freight rate which is applicable to people who are next door to us, and there's a higher the price for customers in a faraway location is obviously going to be higher because there's greater freight. Then there's another thing which weighs on the cost of the glass, which is what is the type of glass being used. So, for example, now, we got into 2 mm fully tempered glass way back in 2017 because we could see the future coming. And now what we see for the first time in this country, from the month of June, there have been enormous imports of 2 mm fully tempered glass into India. So I feel that fully tempered 2 mm glass is going to be a very big player, very big thing in the country. And there are very few people in the world who can do that. So there, the price at which they're supplying from China is going to be the major factor in determining the selling price in India for the Indian producer as well.
What will the difference be? So if someone has to import, I'm just speaking from an industry standpoint, if someone has to import, now they're perhaps getting it 10% cheaper because of the non-renewal of the ADD, versus I have to, say, call up Mr. Kheruka and buy from Borosil. What would the difference in the rates be?
As I said, I cannot give you a rate at which we sell because the rates are different for different people. When I speak on television and say my rate is X, then somebody will say that I'm getting it lower than X, or somebody will say I'm getting it higher than X. So we try to maintain a stability at the X factory level.
Okay.
And then the cost of freight.
So what we're trying to understand, Mr. Kheruka, is that the non-renewal of ADD, does it change the way you charge your customers? Will you have to take price cuts? If yes, by how much?
That depends a lot on what the, you see, let's say for instance that our price is 135 rupees per millimeter today, and the price of glass from China is 128 rupees. All right. Now we are already coming to the end of August. For the last 2 years, we have been seeing that as the year is drawing to a close, I mean the calendar year is drawing to a close, then the demand for glass and other components starts rising dramatically in China because their need for completing the contracts that they have taken becomes very urgent. And the last 2 years we've seen prices going up. So the reason I'm not able to give you a very definitive idea about the selling price is that, look, in fundament, the price has come down from the import price from China has come down by, say, about 10%.
Okay.
Now, how much they will increase their price from the price at which they were selling is something that's open.
Okay.
So as a net result, at what price we were selling is something I cannot say will go down by 5% or 10% or at all.
Okay. But the imported glass coming from China will definitely be cheaper than what you're selling it at. I mean, that's a given?
Yes, that's a given.
All right. Final question, sir, before we let you go, Mr. Kheruka. We just spoke a few days ago and you said that Interflow deal is in pause mode. It's still in pause mode, or have you pressed play?
It is still on pause mode because the news coming in from Europe is quite grim, actually. And we see the price of the inputs like electric power and gas rising to all times high. We're looking at possibilities of recession and so on.
Okay.
So these are factors which we cannot ignore.
Okay, all right, Mr. Kheruka, we appreciate you stopping by and try to give us a sense about, how things are likely to pan out. For the time being, the market believes that your business is still on a rock-solid footing, and that's why your stock price as well is higher. Let's see how things pan out, but this could impact pricing owing to cheaper imports.
And I guess the market is also, rewarding Mr. Kheruka's candor. He said that it will be lower. How much lower, we don't know, depends on all of that and stuff. So he's not giving any numbers which he's not sure of, and the street likes that. He's always been candid in the past as well. So that's about Borosil Renewables. The stock up 5%. With that, we wrap up on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.